Hey guys, in today's video we're gonna discuss what a trend line is. Have you ever tried hiking on a mountain trail? The path usually goes in one clear direction, sometimes up and sometimes down. You don't need a map to see where it's heading, because the trail itself shows you the trend. That's exactly how the trend works in trading. In trading, a trend simply means the general direction of a price over time. The market can trend up, trend down, or move sideways with no clear direction. Let's start with an uptrend. Imagine climbing a staircase. Every step you take is higher than the one before. That's what an uptrend looks like on a chart. The price keeps making higher highs and higher lows. Now, in a downtrend, it's like walking down those stairs. Each step is lower than the last. On the chart, the market keeps making lower highs and lower lows. And in a sideways trend, it's like walking on a flat ground. The market is going neither up or down. It's just moving between support and resistance. So, where do the trend lines come in? A trend line is simply a line you draw on the chart to connect the highs and the downtrends or the lows in the uptrend. It helps you see the trail the market is following. Think of it like training wheels on a bike. Even if the road wobbles a little, the wheels keep you balanced in the right direction. A trend line keeps your eyes focused on the big picture instead of getting lost in every little price move. Here's how you draw one. In an uptrend, connect at least 2 or 3 lows with a straight line going upwards. In a downtrend, connect 2 or 3 highs with a straight line going downwards. The more times price touches the line without breaking it, the stronger the trend line becomes. Traders pay attention when the market respects the same line multiple times. Now, trend lines are not just for drawing, they are for decision making. For example, in an uptrend, traders often look to buy near the trend line, expecting price to bounce and continue upward. In a downtrend, they look to sell near the trend line, expecting price to keep falling. But just like support and resistance, trend lines can break. And when they do, it often signals a possible trend reversal. Think of it like a hiking trail that suddenly splits. You were going uphill, but now the path turns downhill. The break in the line tells you the market might be changing direction. Now, let's add a real-life analogy. Imagine traffic on a highway. If the cars are going in the same direction, that's the trend. A trend line is like the guardrail along the road. As long as cars respect the guardrail, they keep moving in the same direction. But if a car smashes through the guardrail, the whole situation changes. Another tip. Trend lines can also be used to spot channels. A channel is when you draw 2 trend lines, one on the highs and one on the lows, and the price moves neatly between them, like a train running on rails. So, to recap, a trend shows the general direction of the market. An uptrend has higher highs and higher lows. A downtrend has lower highs and lower lows. A trend line is a simple tool to connect those highs or lows and see the direction clearly. The more times a trend line holds, the stronger it is. And if the trend line breaks, it might signal a change in direction. So, in short, trend lines are your roadmap in trading. They guide you through the noise. They help you spot opportunities and they warn you when the market might be about to change course. Master trend lines and you will always know which trail market is following.